position on MSTZ is doing pretty well. I just reduced or trimmed part of my position. I just announced it to my LPP team. Again, for those that do not know, I trade live every single morning. Again, it's not once a week, it's not once a month, it's every single day right at market open. Today, the main focus that we had was paying attention to the price action of Bitcoin. I don't trade Bitcoin, I don't trade crypto, but as Nasdaq began to sell off, Bitcoin began to fall. There was a huge sell-off during the, not overnight hours, but it was in right around, if I'm not mistaken, what was it, like 4 o'clock, 5 o'clock, that led to Bitcoin really begin to retrace. Nasdaq market was also in the red during the overnight and extended hours. And then right when the market opened, it originally tried to pump, hit a previous resistance range, which was the same resistance range that we pretty much had on Friday. And then we began to sell off. As the market sold off, I played it super simple. When Bitcoin drops and MSTR continues to drop, MSTZ goes up. We're up over $7,000 on the day. I've trimmed a majority of my profit and I'm sitting pretty. I'm very grateful, very happy for how today played out. And again, NASDAQ market is testing a major support range at 600. I do want to remind you, markets are more bullish than they are bearish. They always try to find a reason on why to recover, but there has been a lot of uncertainty that the market is currently experiencing. Let me explain. Again, happy Monday. For those that did not see, the Dow Jones as well. Industrial falls 600 points in 30 minutes as U.S. equities markets react to new tariffs threats from President Trump. For those that did not see, a statement from Trump himself. Any country that wants to play games with the ridiculous Supreme Court decision, especially those that have ripped off the USA for years and even decades, will be met with a much higher tariff and worse than that which they recently agreed to. Buyers, be aware. Thank you for your attention to this matter, President Donald Trump. Now, again, it's not about agreeing to these tariffs or not agreeing. First off, why are we talking about this? Why are we getting political? It's not that we're getting political. It's that this form of politics does influence the market. I want to remind you that on Friday, markets rallied because the Supreme Court decided that Trump's tariffs were illegal. That's what they agreed upon. And markets rallied based on the idea that, hey, no more tariffs. They don't like uncertainty. Tariffs brought uncertainty. So they rallied. Now, this is why we laughed when markets tried to rally at market open. I'm like, did we not see what happened on Friday shortly after the Supreme Court decision? Trump started to announce new tariffs from 10%, then on Saturday, 15%, and now he's threatening even more countries, right? Stating that if you try to play games with us, we're going to slap you with more tariffs. I don't agree with this by any means. I think it's irrational. I think it's emotional. Nonetheless, it doesn't matter what I personally think. The part that I really wanted to focus on was he's announcing more tariffs. Markets don't like tariffs. It's uncertain. So when markets were trying to pump, I laughed because, and again, go watch today's live trading session. If you're not part of my LPP team, it's the second link in the description down below. We laughed at the idea of like, markets want to try to pump in an irrational way to retest previous highs. For what? They rallied on Friday because there were no more tariffs. Now more tariffs are getting announced. Again, it's not rocket science. It's just understanding the way that the market should be moving, right? It's understanding the sentiment. There could be an overreaction or an irrational reaction, but nonetheless, this is not good news. Look into the VIX index, the volatility index or the fear index. And that is something that, again, you need to pay attention to anytime that there's more fear being injected into the market. So once we saw that to begin to rise, and then we saw markets begin to retrace, we began to short a little bit more consistently. And again, very happy with how it played out. $7,000 on the day. Not just that, but now the Nasdaq market is testing a major support range, 600. Is it super safe to short here? No. Can the markets go lower? Yes. If you're a beginner, should you take the risk? No. Shorting comes at a greater form of risk. Markets are more bullish than bearish. I'm not going to be here to pretend to be like all the people on X and all these Reddit traders that don't know what they're doing, that just because they're choosing to take a risky trade, they're going to encourage you to do the same. No. When things come at a greater form of risk, you need to acknowledge and understand it. And beginners normally don't. So it's better to be safe than to be sorry. It would make more sense to stay cash, allow markets to drop, and then buy good quality companies at a good price as markets tend to recover. That's what I believe would make most sense for beginners. If you're an active trader and you have experience and you know how to manage and mitigate risk, then again, this is the exciting part of when volatility begins to present itself. On top of that, again, anytime markets fall, not Bitcoin, digital gold, right? Bitcoin likes to call itself digital gold, but it sells off even before markets sell off. No, real gold, right, is cyclical. It goes up when markets drop. And right now there's a lot of tension between the US and Iran. It's escalating. If there is an attack, more uncertainty, more fear. What do you think is going to happen? Markets will drop further and gold will rise higher. It's cyclical. It goes up when markets drop. Not digital gold. That's made up. It's fake. No one actually wants it, right? The only person that's willing to pay for it is the next person that's trying to trade it. It's a speculative asset. Gold, not saying that it's a good investment long-term at $5,200 per ounce, just saying that it tends to go up anytime uncertainty begins to present itself. That is normally how it tends to move. So please understand that. So when asking the question, okay, well, what if things do get worse? Either stay cash or know what goes up as markets drop, right? There's SQQQs, which is not an investment vehicle, but it goes up when markets drop. SPXS goes up when markets or S&P 500 goes down. There's gold-based ETFs that you can also choose to trade to try to hedge those positions that might be selling off a little bit. Or again, you can create a watch list, an oversold watch list, which is what we're doing with our LPP team. And as markets drop, we're building a watch list for oversold companies that are decent deals that we'd like to pick up when market volatility and market uncertainty kind of begins to cool off. Markets find a support, and once they begin to recover, we have 3 to 5 stocks we've been watching that we can choose to invest in or swing trade as markets begin to recover. But as of right now, yes, there is fear, there is uncertainty, tariffs, and Iran. That is the current uncertainty that's presenting itself. I also do want to remind you that HIMS is expected to report earnings today after the markets close, so please make sure that you are aware of that. And then on Wednesday, NVIDIA is set to report earnings after the markets close. And again, NVIDIA is the most valuable company that's publicly traded and normally does an amazing job reporting earnings and also great guidance. But you let me know down in the comment section what you think. Will it exceed Wall Street's expectation and cause the markets to recover, or will it report good earnings, but still not good enough and cause markets to drop even further? So again, very excited to follow up. I also do want to let you guys know, Open Door set up the most beautiful bull trap for all the bag holders. It pumped up 6 or 7% in 2 to 3 minutes, got a bunch of people excited for no reason, and then hit highs of $5.39 just to give it all back, and now it's down 4 to 5%. Again, this is a BS company that's down over 50% in the past 5 months. You let me know down in the comment section if you can find a stock that is more worse performing than Open, because I'm struggling to find anything. And guess what? The cheap can always get cheaper. I think that Open will eventually end up dropping below $1 per share simply because it's a glorified house flipper that calls itself Open Door 2.0 or uses AI, but all it does is it's a glorified house flipper valued at a tech company, as a tech company. So very excited to follow up with how things continue to develop to see if their new management actually begin to turn this failing business into a profitable one, or if it was all smoke and mirrors. Very excited to follow up. Again, I trade live every single morning, and whenever you're ready, like you can see, I'm very blunt, I'm very straight up. I don't believe any of the hype, and if I see any form of BS or red flags, I call it out. My main focus is always to look out for beginners, to manage
anything associated to crypto getting murdered. Banks now join the party. So help us think about like the sequencing of this and where you see, we talked about last week with you, the major indices just don't seem to be particularly bothered by all this.
Well, remember, the index doesn't exist, right? Only in the modern era. The first index you could trade was the New York Stock Exchange Index Day Futures. Obviously, in this area, you got ETF for every index, you got futures for every index. But in principle, the index doesn't move up or down. Stocks move up or down, and the index follows, right? And so the index is remarkably sideways, quiet, sort of unaffected, or whatever you had just said there. But internally, it's quite the story of bifurcation. Stocks that are steep and extended and unto themselves, whether it's the obvious things like Western Digital and SanDisk, or equally steep, it's Caterpillar and GE, Johnson & Johnson and FedEx. These are stocks that are up 30 and 40 and 50% over the past 6, 12 months. And the equal and opposite move is Microsoft, right? And Hood and Palantir. So you net that out and you've got this sideways index. That's not really what's going on. There's very few stocks that are sideways. And so the question is, how is it resolved? The optimist says that, well, the strong stocks have the right read on the future, and that what's happening at Caterpillar building out whatever AI data centers and aerospace and J&J and FedEx, and the good ones have a proper read, and the weak ones are so oversold that they will bounce and that the market will go higher. But bifurcation almost always sort of resolve the other way, which is to say that the weak get worse. Look what IGV is doing today, and the strong ones succumb. Right? They just can't keep going. I mean, Walmart's never traded more than one-time sales. It's about one-time sales. Caterpillar's trading at 40, 45 times earnings. And so at some point, the stocks are full, and it usually ends with lower prices for the general averages. Now, we haven't had a meaningful sell-off since about a year ago, and it was meaningful. It was the tariff-related swoon. That was at 21% in the S&P. But it all, you guys are already talking about it, all hinges on NVIDIA here. That would, forget the things that you can't model. We attack Iran. These are called force majeure. They're clauses, acts of God. No one can predict it or you can handicap it. But what is known is that the largest company in the world is reporting earnings. And that's a sentiment thing more than it's probably good. They're always good. That guy, whatever his name is, he's always out saying it's going to be great. And it always is great. But the question is it good enough?
Yeah,
and so it's a, go ahead.
No, I was to say we'll hear from them Wednesday afternoon when we get back from this trip. And you're right, that's probably one of the main events this week. But you wore a macro hat for a while. I'm not asking you to drill down, but there are a couple things to me, Carter, that should be concerning at some point for the broader market. When I say broader market, I'm talking about the S&P, and it's the VIX, which is we're sitting here, is now north of 21. And north of 21 on, yes, a market sell-off day, but it's not like this is one of the most unorderly moves to the downside we've seen. And the VIX has been sort of percolating now for a while. And the fact that Bitcoin at 66,000, wherever it's currently trading, cannot get out of its own way. Those to me, and then you want to throw gold in the mix, getting back on the horse. You throw those in the cauldron and stir it up. And at some point, I think that makes its way to the S&P 500.
Yeah, it's a very defensive tape. So the ultimate defense, besides the obvious thing, of Procter & Gamble and big energy integrated, is growth, right? Growth is considered defensive, non-cyclical, that you have a mousetrap that can grow, NVIDIA perhaps, and it doesn't matter where the economy is, where Main Street is. But those names are under so much pressure at this point that the only thing that's working are truly defensive names. Utilities are straight up. Staples are straight up. Big integrators like Exxon and energy in general is straight up. And what we're starting to see then is slippage in other things. The banks are, forget about the private equity stuff. They've been selling off for almost 10 months, right? They peaked back in the summer. But it wouldn't take much to crack high flyers such as Goldman and Morgan Stanley, JP Morgan. And then you'd have a whole other set of negative circumstances. It just feels like the narrative for higher, yet higher is sort of waning. And again, we haven't had any kind of proper give back drawdown since essentially a year ago in April when we did drop related tariffs. So we've had these 3 and 4 and 4 and 5% little nicks, but we haven't had a 7, 8, 10, 12% sell off. And isn't that perfectly normal? But it's a big week for earnings in the sense that 681 companies in the Russell 3000. That's a lot report this week. And yet one of them is the big one. One of them is 4.6 trillion. The other 680 add up to about 5.2 trillion. And so NVIDIA, we can look at the chart, but NVIDIA has both positive and negative things about it. And the negative is how poorly its performance has been to semis. Right? It is the leading semi, and its performance to semiconductors as an aggregate is disastrous. And so its absolute chart is this, right? It's game on here. This is what happens. You work into the apex, you get resolved. It's always news that resolves it. The implied move is about 4%, fairly muted. The average move over the last 40 quarters, 10 years, is 7. A 7% pop would take you about 203. 7% drop would take you down into the 170s. We closed at 189 on Friday. So it's a big standoff, but it has to be noted that I think this is the ultimate sentiment. Were there to be the kind of bad action that we saw in Amazon, for instance, or others in NVIDIA, it would set the tape down hard. For sure.
Yeah, and to your point, it's pretty fascinating when you talk about NVIDIA at 4.5, trillion, and then all those other 400 or so. I can't remember the number you just mentioned, but that are about 5 trillion. And we say this every quarter, like this is the one, this is the one. And I feel like your relative underperformance that you just highlighted in NVIDIA, suggests that investors are just less interested, obviously, and especially as the multiple goes lower. But the narrative over the last, call it 6 months, has really moved away from NVIDIA, whether it's China not buying their chips, whether it's Google's TPUs, whether it's all NVIDIA's major customers working on custom silicon as we get closer to models that are not likely to improve that much more in the near term. So to me, that's a really interesting story. I love it that you highlight the fact, whatever that guy's name is, he's always positive on it. And, he's been really positive anytime he's had a mic in front of him over the last, few months. So again, it's probably hard to bet against that. So Salesforce also reports this week. And what's interesting to me about this is that this is kind of ground zero, if you think about it, within the SaaS space, right, for disruption. And we've highlighted this probably 100 times over the last couple of years. Mark Benioff, the CEO of this company, probably the best software salesman that has ever existed in the history. Maybe Larry Ellison was the other one, right? He's been talking about agents, AI agents, for 2.5 years, and investors don't care. So what do you see here? Because I'm just hard pressed to see that there's little that can come out of this quarter that will change the trajectory. Maybe it slows it down from the pace at which it's going lower, but there's no scenario where the whole narrative changes by their results, by their guidance, by the narrative.
Yeah, I mean, it's just a bad circumstance, right? There's no other way to characterize it or color it. It's down aggressively today. It's literally almost been cut in half since its peak, and I would say lower. Now, does that trend line really matter? Not particularly, but I would say that's a reasonable price objective, even as there's immediate weakness ahead, and then we see from there.
Let's go to CoreWeave, because this is obviously something Dan's done a lot of work on. It's in a similar pennant formation, albeit with the ranges a lot larger. We've seen some exuberance around this stock recently. We've seen some negativity, but what's going to wind up happening here, Carter, you can speak to this. The ranges are going to get smaller and smaller, and then something's got to break at some point. And I got to tell you something, for this one, given the magnitude of the downtrend line and the same thing, the magnitude of the uptrend line over the same period of time, it's a bit of a coin flip for me.